Hi guys, and welcome to this quick little recap of the day. I just wanted to share with you a little setup that is a very interesting one to know about when using Visor, as it's happening quite frequently, and it's very easy to exploit this setup in particular. So I just wanted to show you briefly an interesting shape of the day, let's say. So here you can see we are in history playback. We are at currently 6 minutes post open, right? This is Paris time, so CET time zone, but that corresponds to 9:30 Wall Street time, right? So what we can see here, basically, before we start to play the playback, is already some context, okay? So we are looking at volume here, but let's switch to open interest. Let's remove those gamma exposure bar just because I want to show you something here. So we see the expected move, right, from those two big rectangle. We are opening right in the middle of this expected move, okay? This is not unusual, it's actually quite common. But today is a day like this. We are opening just in the middle of the expected move. We are in positive territory in terms of gamma exposure per weighted with open interest. So that's what people would call notional in some case, with a slight variation. We see that on the volatility spread and on the VRP, if I'm showing it to you, which is here, all right, volatility premium, we are quite cheap, okay? So that's nice information to have. The volatility is going down, but that's not really meaningful at the moment because it's basically 6 minutes post the open. So this, we don't really care at the moment. What we can see here though is that we are slightly positive on the open, on the day, sorry, barely positive actually, quite neutral, but that's a good thing to know. And we can see as well, that's more important, that the VIX in this case, because we are looking at SPX, right? So the volatility index of the SPX being the VIX is slightly down for the day, right? And the number here is green, meaning that we are perfectly aligned on the low end when it comes to the monthly percentile, right? We can see as well no particular mispricing or weird behavior on the skew. We can look at the 5DTE, but everything looks normal as well, okay? And on the weekly panel, we can see that we have a huge cluster at 74.50, right? So that's good to know. This level would be this one here, huge open interest. Let me put back the bar. Okay, we can see here that big green bar actually on the day. You can see the volume as well on the open, slightly skewed to the upside, right? So that's also good to know. But for now, let's focus on the setup that I want to show you. One very important thing to track that I used to track in the day is the zero gamma level, okay? Especially based on the intraday volume. So here you have the zero gamma, or at least the gamma exposure evolution, based on the open interest, okay? But here, that yellow line here and that profile here would represent the cumulative sum of the gamma exposure per volume per day, so intraday in this case. So that shows you the shift of skewness of the gamma exposure for the intraday volume only, all right, without taking into account the open interest. And one very good thing to observe is the behavior of this zero gamma level, if it's going down, if it's going up, if it's not moving at all, and especially how much the price is getting far or close from it, okay? So let's advance a bit. Now we see that the price is moving up, okay? We see that the zero gamma level slightly raised, but now we are building quite a big distance between the two levels, okay? And in this case, what I love to see is a pullback of the price on that zero gamma level. It can happen in multiple ways. It can just be the price going down to hit and bouncing back, or going through, pulling back from the upside and then continuing the downside, okay? Or simply just like the zero gamma level, continuing to raise to a point that the price will pull back on it, okay? Very important as well. Here you can see that a negative cluster just built while we were coming to the initial raise of the open, and that's an important thing to see as well. If we go to the heat map, we can clearly see that big red purple line in the middle of the positive cluster. All right, so if we continue to advance a bit, we see that the 0 gamma line is going up again. You know, it continues to follow, and at some point the price pulled back and bounce on it. Okay, so here, interesting thing to see. Let's break down quickly the thing. We see that the price slightly raised, okay, then pull back on this negative cluster, while we are still very positive here, and while the volatility slightly increase. One good thing to see though is that the VIX here is going down, right? So that's expected. The price is moving up, so we will of course want to see the VIX continuing to drop, right? But here we are bouncing on the 0 gamma while being still in positive territory. And especially if you look at the delta profile here, there is barely anything right here. The big cluster would be here, here, eventually here, but there is not much pressure from the dealer side in where we are. So now what we would be expecting in a normal day where you are positive on the environment, where the volatility is quite low and actually going down quite quickly, is to basically take a long, right? And in this case, this is the perfect moment to take a long. You are bouncing on the 0 gamma. You can enter at this level, put a stop just on the strike below, and if eventually we break that to continue to the downside, well, you would have been wrong. But if we continue to raise towards this huge open interest target, that's quite a nice trade. Actually, it's like a 50-point trade on the ES with 1 or 2 micro, or even a milli. It's a huge trade on the day. Okay, so now let's see what's happening. You see that we are bouncing back. We are starting to play a bit, and then suddenly we are raising. Okay, huge gamma exposure on the open interest building here. And what happened? We break it. So you can also oscillate between open interest and volume, okay, to see if the skew is still valid on the intraday basis. But I usually, most of the time, keep an eye on the open interest based gamma exposure and just like validate with the volume if my thesis still follows, you know. So let's go back to the open interest. And now let's see what's happening. Okay, I will switch to the heat map. And now we are just grinding. You see that the call wall for the day would be this one at 7,500. Okay, so that's the big open interest we identified at the open, right? It was already here, big cluster here on the top. Okay, just before we break the expected move, and that's basically where we are going. So now what we could expect on this level. First, when the trade is that long in terms of time, and especially in a day where the gamma regime environment is quite positive, you shouldn't expect a huge squeeze to the upside. You should expect a slow grind, okay? And it's not stupid, it's actually quite wise to exit the trade before we reach this level, because most of this positioning will probably start to collapse before we reach the level, okay? And that's because the gamma exposure of this one will become so strong while the time pass. The theta decay will basically shrink the bell of the curve of the gamma, right? And because of that, it will be very interesting for these positions to be closed as soon as we enter basically a small delta range around that strike, because as soon as we start to drop a bit with as theta decay that would have happened in the meantime, the position will start to lose a lot of value, okay? So of course that's institutional position, it's not retail, but even it's nice to consider that in a day like today, you shouldn't be too greedy, and when we are getting close to your level, you should start to scale out at least and eventually exit. So as we can see, the day continue to pass, and we barely touch actually the level, just at a few ticks below. Okay, the market is still open, so we could see what's happening now. Actually, now you see that we are starting to pin about this level. Not surprising at all that we start to reject, because if you remember, when we were here, we had that very positive delta exposure here from the dealer side. So which means that once we reach that level, the dealer will want to probably sell this stop. Okay, in a positive gamma environment, you have to know that the dealer will buy the dip and sell the highs, right? So that's exactly what's happening in a day like today. Very easy to anticipate that. I mean, it could break and continue like a mega squeeze, but we are talking probabilistically here, you know. We are not trying to guess what's going to happen, if there is going to be a tweet or anything to, you know, that would completely change or shift the context. Here we just know there is a major open interest here, big positive environment. We know that we are positive on the weekly exposure. We know that we are very positive on the open interest as well. The volatility is going down. We have a big target here that is screaming that would be your exit. So yeah, you're just taking what's given to you, you know. And in that case, it wouldn't be surprising at all that at the end of the day we just pin to this level, like we are basically starting to do now, you know, like basically gravitating around that big magnet level. But that's an interesting setup that you should be very careful of in a day like today, and in actually most of the days. The zero gamma bounce is a very, very solid setup, usually giving you at least 10 points or even 15, and sometime continuing the grind like this, especially when the positive gamma is continue to raise, you know, along the day, and the volatility continue to collapse. That's definitely something that I'm looking most of the days, and it's a very quick setup to learn, very easy to understand and to exploit. And aside of that, it gives you a very nice context to where basically you don't want to enter, and when it's when the stars are aligned, let's say, to grab a nice little bounce. Usually the zero gamma level is the place that you don't want to enter trades in, especially if we are gravitating around. But when we are starting to build distance like this and suddenly creating a pullback on that level, it's very different. So when you see sometimes the price ranging around the zero gamma level without the zero gamma level to move, you know, you don't want to enter that place. And if the price would have bounced and came back to the zero gamma for once or twice, you would certainly not want to enter in this area. But when the zero gamma has never been touched in the session, the price is building distance, and we are suddenly coming back to it, it's usually a very nice point of reaction, especially if it's also aligned with a single negative cluster like this in the profile and we are in positive environment. I repeat, that's based on probabilistic market trend, you know, it's very common behavior of the price. It's, in my opinion, one of the most important thing to look at when using Visor, to know where the zero gamma is and how much the price has been far, or how the price action behaved before we touch that that level. But yeah, in a setup like today where you see the zero gamma level climbing in a way, you see the volatility collapsing on every panels, you see the gamma environment positively building, that's basically just an easy trade, you know, because you can really skew your risk reward to the upside. And yeah, and that's probably the easiest setup using Visor on a daily basis, as most of the days are basically on a positive environment with a positive gamma exposure skewing to the upside in the intraday volume like this. So that's most of your days in the market when trading ES, SPX, or NQ. And that's why it's very important to understand and to try to exploit this setup, as it's coming very often. All right, I hope you enjoyed that little video, and I wish you the best trading. Bye-bye.